Okay, welcome to the Wave Academy. I'm going to talk about the wave principle. If you don't know me, my name is Eduardo, but you can call me Lito. And I've been practicing this principle for since February of this year. But when I started, I thought that it was called wave analysis. And I was missing a big part of this word that Elliot described in this book, that it's called the wave principle. As you can see, he is the author. And he was talking about the behavior of the movements, because when we see the charts, when we see these patterns that goes ups and goes down like this, we have to understand that all these sequence of movements have a reason of going up and down, because the market never moves straight up. But what makes it move the way that in this sort of way that we can actually see these patterns that Elliot describes in his book. So this is where I always say that this is not a theory, because it's not talking about a hypothesis. It's talking about a principle. And principle means the behavior of something that initiates the start of something. And this start has a lot to do with Fibonacci. I would say that over 90% of the wave principle is based on Fibonacci. Fibonacci is described in the book of Nature's Law. He talks about how much the things grow in proportions. When I add this one with this, I get the unit. This part of the puzzle, of the piece, of the part, is if you sum these two, you get the unity. But when you get them separated, it's the Fibonacci 382 and 618. This is the way the things grow and how the things shrink or go down or go to the last block. From 21, we go back to 13, and then we go over 21 to go over 34. And more or less, this is what I say, that you please study this chart. When we see this chart, we understand that this number or entity has a bigger one and a smaller one by step. When we go to higher numbers, we get close to the perfect ratio. This is the 1.618, where we extend the extensions. And when we go to the 382 or the 618, that are retracements. You can see here, this is the unity. To these numbers, it expands. To these numbers, it contracts. So this is where we get these numbers that are really important in our charts, especially this one that is the square root of 1.618. The price always goes up and down, up and down, up and down, right? But inside these movements, we have the 1, 2, 3, 4, 5. This means that I don't want to buy here. I want to wait for the wave to finish, and then I get in. How do I do that? Well, basically, you trace a Fibonacci here, and you wait for the price to come back to this area. If you don't want to be watching the charts, just leave entrance here. Remember the first rule: it doesn't go back to the start of the impulse. So I'm going to set my stop loss here a little bit lower. If this goes down, means that I'm wrong. This is not going up, but this is a corrected wave to go down. So this is when I know I didn't do this well. I start to count the things again to see the new figures. But basically what we want to do is spot a corrective wave to get the next one. Where is the next wave going? That's why our first take profit is the level 618, is the longest one, and the 272 is our first take profit. One of the things that we have to learn is that we don't always want to be inside of a wave. We always take profits just in case something goes wrong. So our entry is around this area, and our stop loss is below the initial part of the Fibonacci. We want to spot an impulsive wave, identify a corrective wave, wait for the break above it, and we can get inside of here. It usually breaks the trend line and we test before going up. Or we can try to get the C that usually returns to the 618. Depending on the corrective wave, it could retrace to the 382. So let's see a little examples inside of my chart here. I already talked about the theory, but I want you guys to see the actual action here in the charts. So let's go back to the bottom of the pricing, where it came back to 3K around it, right? When this happened, I was looking at the triangle. I don't know if you see it here, but if you can count it, it's always gonna be 5 or 3. 1, 2, 3, 4, 5. What I get at E? A bit of overflow. They also say that the triangle returns to the 382. And check this out. It did twice, so I can put my stop loss at 786. But this is too much. So maybe above A, because I have to wait for the pattern. I don't have to rush in and get in here. So I leave my stop loss above the A. Okay, also I forgot. When you activate the logarithm, the another thing you need to do is move the chart. Move it, expand it. Try to make the figure looks really comfortable to your eyes. Do you see it now? It looks a little more, it looks better. And then I start seeing other figures. Check this one out. I have a clear here, ABC. And down here, I have an ending diagonal. And you start like finding these patterns. And you get 1, 2, 3, 4, 5. So after the ending diagonal, there is 1, 2, and 3 movements at least. Let's see what happens after this. I use my parallel trend line to watch my corrective wave figures like this. My first counter wave is A. Do you see it? This is my impulse. Let me erase this. This is an impulse. This is the Fibonacci that I want to measure for my next movement. So what do? I trace a retracement Fibonacci to here in TradingView. But I don't want my Fibonacci to look like this. This is the normal Fibonacci retracement of TradingView, but I don't want it to look like this. So what do? I come here and I start playing around with the things. I move the levels, I remove the prices, I just add the percent. I want the price to be on the right. And also I want my Fibonacci to be based on log scale. And I remove my background. I don't want this to be bothering me. Then I don't want the lines to be very, very bright. So I remove them. I remove the trend line here. I don't need it. And I add here the dots. And immediately you notice the difference. It doesn't bother your eyes. But I also can change the colors. For example, 618 is the golden radio. So I turn it yellow and I put it very bright. I want to see it. The 0.5 is not very important. So I put a color that it's there, but it's not like calling my attention. The 382 is really important. So I put it a bright color where I know this is going to be a resistance. And more or less, this is how my Fibonacci looks like. Then you don't know where it's going to extend. You don't know where it's going because you don't have the extension. To add the extension, all you have to do is add the negative numbers. Like this. And this is my second target. This is my take profit 1. This is my take profit 2. Let's see what happens when I add them. So I got my impulse here, and I want to know where is my corrective wave going. The first movement is going to be my wave A. So you have A, you have B, and you have C. If you notice, let me change the color of 6-1. Well, are you going to use my template? And you can see that it returned to this area. What happens in the 7682? sorry, the 786. It did a double top here, and this is with divergence, as you can see down here, my RSI. You see it? It's very noticeable. I also have my trend line here broken, and below it you have an A and B and Z. Do you see it? And it goes down. But before this break, I want to know what happened here. What is this? This is a zigzag. And I use my Fibonacci cluster here. I measure A, and look what it matches with the 786. That's the place that it turned around. This is the place that I want to measure. Sorry, there's a number there that I don't need. It's 382, that one. Okay. And that's where you put your short here. And where is going to code your stop loss? Above your impulse. Because you know that if it goes above this, you are wrong. Look, it's not a bad trade, 6%. And then my take profit, I'm going to move it to the minus 272. And if you can see, notice what happened here. And you have to use the wicks. Check this out. Wick here, wick here. That's why I use log scale. And check this. This is my take profit. And it didn't stop there. It went below. It went below. Why? Okay. And it did something there. The price came back to do 3 movements up and then continue going down. What is this? Another corrective wave. It's called a flat. When you have this kind of confluence, this is your trade. You can go high leverage, 100x. And what would be your stop loss if you were like really close? This is 1 hour. I can come back here in 5 minutes, but TradingView doesn't let me anymore. But I assure you that if I go very close to this in 5 minutes, I can see here some sort of ending diagonal. 5 movements up. 1, 2, 3, 4, 5. And then a break below that. And then you have A, B, C. And then you broke this trend line. And below this, it does A, B, and C. And it went away. And this is my impulse. This is when this becomes my first impulse. And if I don't have this short, I'm going to wait for the break, get the corrective wave, and I'm going to use my Fibonacci tool here again. Let me remove all this disturbance. We don't have to see this divergence here, but we have another confirmation there, ending diagonal. Divergence stops at the 272 with the 786. And that's why I use my boxes. As you can see, I use, there is something wrong with my, there we go. And I have another Fibonacci clustering with the last one that I did here. If you can see, I'm gonna leave this one open. And I can see that this level is another one that it's important. And what do we see here? It couldn't go over that level. And then it touched it again. When you see this behavior of the waves, that it cannot go over a certain level of Fibonacci, that is your true resistance and your true support. It's just the part of the price where it's gonna go back to then go away. Remember this graphic that I showed you? We are talking about this. How many times it contracts and how many times it expands. The price is always gonna retrace a certain part of the impulse. Where do I put my trade? 618. I put my stop loss at a little bit above C. And we take our first take profit, 272. Second take profit, 618, and leave the rest running. Where did it go? To the 272 of the bigger Fibonacci. This trade would have given us around 22% profit. That's crazy if you use leverage. For example, if you use cross, you would like multiply 20 times your trade. It's a shame I didn't know this back when I was looking at this. I was just learning. And all this structure looks like an ending diagonal, but a very big one. Now, why did I say months ago that this was the bottom of everything? Because up here, I saw a triangle with a wave E overflow, like that. When I saw this failure wick, this is called overflow. According to Elliott's books, this happens only in wave E, so this had to be wave E, A, B, C, D, E. It was really complicated to see it back then because I was just starting to study about this. But then it was really clear to my eyes. Which is the target of a triangle, according to the books, is that you use the widest wave of it. And we're going to talk more about the targets. And we move it to E. And we're going to see some important levels of where the price is going to go. As you can see right here. It's crazy. So after a triangle, wave 4 over B, I get an ending diagonal here. And remember, you don't have to be perfect. You just have to see the pattern. And this is a big ending diagonal. I don't doubt it is an ending diagonal. And it also has divergence in the last two bottoms. And this was the most craziest pattern I've seen because inside the ending diagonal, I had another ending diagonal. Do you see it? It's three lower lows, like that. It has inside of it another version of it, but smaller. That's what cycles mean. It's fractals, big things with small things inside and smaller things inside. And you know that if you're here, you already know that. But we can see how similar the particles are with planets, and the comparison of the sizes is just enormous. And you see the same patterns, the same colors.
So basically, the secret of the universe it translates into Fibonacci sequence, and the relationship between a number and the next one or the previous one is what we get as proportions, and that's where 1618 comes from. And then it can expand or contract to multiple other numbers that you can see in this table. And some people may think that this is only for nature itself. But let's remember that we are also part of nature and we have the same structures of expansions and contractions. Have you ever wondered how many extensions do you have in your body? Please be aware of your body right now and check how many extensions do you have. You can have your head, your arms, and your legs. That counts as 5. Then you can watch at your arm, one of your extensions, and you have your shoulder, your elbow, and your wrist, 3. And inside each hand, you have 5 fingers. And inside each finger, you have 3 sections. This completes the pattern of 5-3-5-3, and this is how Fibonacci expands and contracts everywhere in the universe, including ourselves. So why not the financial markets? And the relationship between 5 and 3 is one ladder up, one ladder down. And this table basically summarizes all about what Fibonacci actually is and what Elliot meant when he said that this is the secret of the universe, the nature's law.